The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, well, we ended Wednesday's show talking about cattle and hogs, and so I thought we would start the commodity show this week by looking at the long-term weekly chart of hogs, and we'll also take a look at June cattle. This is not a surprise seeing this kind of move because we've had Rich Anderson on over the past several years, and when we were in the drought area, he was talking about, because he is a cattle operator, he has his own herd, and with feeder cattle also, and so he was saying that they have to cut back the herd because grain prices are too high. And so what happens now, 12 months later to 18 months later, it takes, it's going to be a while before we have extra cattle on coming out, because we're at levels we haven't seen since 30, 40 years ago. So this is why we're seeing, cattle prices and hog prices going straight up. Someone mentioned pork bellies. I don't believe they trade anymore. I think they're taken completely off the board. That used to be one of the favorite trading vehicles of people on the floor of the exchange, including myself. I really love trading bellies. They moved around almost like natural gas, but they don't trade them anymore. I'm almost 100% sure of that. Not 100%, maybe 99.9. But anyway, these they're completing a major patterns up in here. We're having some wild volatility. Hogs backed off in the last 2 days. They've backed off more than 4 cents a pound, as did cattle. So these are the types of moves that we're seeing. Much like the parabolic move we're seeing in the stock market, we're seeing similar type moves in the other markets like cattle and hogs. So we'll next take a look at cattle here. If I can just get the chart to come up there, we should be okay. And we'll take a look at cattle, and you can see this really wide-ranging bar we had over the last day or so. It came in right off of a big expansion at a butterfly pattern in the cattle. So we should be in a correction here, and this might be the major top in both cattle and hogs because of the fact that we've had this wild-type action near the high, and we've made some major long-term price objectives with the butterfly pattern on the weekly. The same thing is true on the weekly cattle chart, is that you're looking at these same types of, big moves that have gone, ballistic. What's really funny, to me anyway, is I can remember back in my days at Drexel when cattle hit 80 cents a pound, the housewives went on strike, and here it's at 145, and you don't hear a word. And remember, folks, I've mentioned this many times, but you'll see it happening when you go out to eat. If you order, a 12-ounce steak, you'll probably only get 9 ounces or 10. That's what they're going to do, is cut back, because they can't, push the prices through, all these price increases, because the consumer just can't handle it. And so we'll find out more about this as we go along, but that's what they usually do. If you go into the market, you'll see used to be a pound of bacon, and now it'll only be, like 12 ounces or something like that. So they try to make up for it some way. They do the same thing with cereal. They do the same thing with your oils, like canola oil and olive oil and soybean oil. They do the same thing with those also when prices get absolutely crazy. What's interesting here is, we don't hear any talk about any type of inflation, numbers with this, because why? They take meat out of the inflation index. It doesn't count anymore because people don't eat any meat, including Big Macs or whatever they happen to be. But anyway, that's the bottom line of what we're looking at with the cattle and the hogs. We've got some really big things happening today. I think the best way to look at it is start out with the currencies, because we've heard some people in the Tiger Den already talking about the currencies of what's going on there, and I wanted to bring that up to show you folks what's happening in the euro, because we've reached a real critical level here in the euro. on the long-term charts. I'll put this up here so you can take a look at it. But we are just hovering right at the level right now. We're just making new highs as we speak today, which is not a surprise because we came out of here very, very strong. We're right at the 61% retracement now of the high we made from 2011. That comes in pretty much spot on at where we're trading right now at 138.60. This is the third time we've been here in the euro over the past 5 or 6 months. We've been up in this area one more time, so we really need to break out above the 139.40 level. And if we get that, it looks like the euro will have at least a move up to the 786, which would take it up, to the 143 level. This means the dollar is going to be trashed, and that they're going to be looking at prices for U.S. stuff is going to be a lot cheaper for people because their currency will buy more of our products in the U.S. So we'll know more about that. But the major trend in the euro is still down. Even when we get to 143, it will still be a down move. It'll just be completing a very large ABCD on the daily, and you'll see that it takes it right up to the exact 786. I really need to put this into Tiger TV so you can take a look at that and see where we are, because today we've had a really strong move coming off some really nice numbers. I think I can show you the 30-minute chart on these to show you that I'll do the 60-minute, I believe, and you'll see that we made a perfect 61% retracement last night, and early this morning we were just setting there, just spot on, and we're really this is completing a larger part of this ABCD pattern, and so people that are buying breakouts here, this is where they can get hurt, because you've got a completion of the smaller patterns on the daily. You're up 6 or 7 weeks in the euro. So, buying a breakout after 6 or 7 weeks, I'll tell you, I have never had much luck doing that. It might work, but, it's been a real mystery to see how these things will stop up in here and then, pull back, one more time. So we've been up in this area before at this 138.60, and we're completing on the intraday, going back for 8 or 9 days, we're completing some major ABCD patterns at this point. So we need to be able to figure that out, that this is a possibility of maybe a false breakout in the euro. That's what I'm looking at as a potential. We're right up to this 138.70, which completes the ABCD on this hourly chart that goes back through last week. And so I would rather send my checks directly into the Chicago Mercantile Exchange as opposed to paying the commission for trying to buy it up in here. This has been the time to buy it was yesterday or today. We had a beautiful areas down here, 140 pips lower, and yet now we're moving up a great deal, very strong, and we're right up at this major resistance one more time. So I've mentioned several times that we are in a period where we are going to see a tremendous, really tremendous volatility in these markets, not just the commodity markets, but in the stock markets also. We're starting to see a little bit of it, in the stocks since last Monday. Monday we were down big. Tuesday we gapped up and left a huge gap on the cash S&P chart, and now we left another gap today on the cash S&P chart. And these gaps we know will be filled. The question is whether they'll be filled in our lifetime or not. So that's the bottom line on the euro. Now we have the same thing occurring. We should go on and look at the British pound also, because it also is doing the same type of thing. But before I do that, I wanted to talk about another market that looks really good to me from a technical standpoint, and that is the gold market. We've had a terrific move here in gold just recently, last night, and I'll put this in so you can take a look at it and see what it looks like, because it's really quite interesting here. If I can get it put in, you'll see we have the same situation in gold like we have in the euro, because we came down last night to the 61% retracement, and then we shot it up really quick. and we went right through the 618 immediately. We went through the 786 immediately, and that sets up a move to 1365, 1366 per ounce in the gold. Now, this is totally contradictory to what they're telling us about if there is anything going on in Ukraine, and I'm beginning to think that that's highly suspect. But this is the type of thing that we're looking at here in gold, that we have this target that's going to be coming in up around the 1368 to 1366 level, and that is really it's been a spectacular move, folks. I'm going to put the daily up because we were very bullish on gold, as you recall, way back in January when we were completing the time and price move with the big ABCD down at the 1180 per ounce level. Everything came in. We had the really nice move up, the pullback to the 382 that came in at around 1240. And in the last 5 weeks, we've ran over $100 an ounce to the upside, telling us that's what we've been doing. So this looks like we're heading higher in the gold. The 786 comes in right near where that big ABCD comes in, up around the 1370 level. And folks, we're only $19 away, so we could be there in a matter of a heartbeat. Silver's been the stepsister here, and it's going to be interesting because if we clear 1450 in gold, I will predict that we will take out the highs at 1932 per ounce that were made 18 months ago. The reason for that is our retracement made a double bottom down there at the 61% retracement at 1175 per ounce, and that's a very, very strong support. So that's the thing that I'm watching here in the gold market. It just looks really good, so you can see. Someone asked me if I would, talk to the people in the silver pits, and there are no silver pits anymore, folks. Gold and silver basically trade all electronically now. They have a silver pit, I believe, a gold pit in Shanghai, but it's very small. It's a very small market. And the only pit in New York, and the commodities, it's still there, but you can't have access to it anymore unless you really well connected with a member, and even then they don't like to take you down there, is the crude oil pit. Crude oil and heating oil still have pits available, but they're not available to the public anymore. It's only for members only. And in Chicago, we still have some pits available in corn and wheat and beans from the old timers, of which I am one. But most of the others is just about all electronic. The bond pit is a 1/10 of, less than that, 1/120th of probably what it used to be. There used to be probably 1,000 traders in the bond pit, and they're lucky to be 25 or 30 down there these days with the electronic trading that we have going on. And of course, bonds have been getting hit, pretty badly all along here. So it's going to be interesting what happens with them over these next few days, because there is no flight to quality anymore. That stopped Sunday night when we got up to the 134 level, and we've dropped 3 full points to the downside. Folks, higher interest rates are coming. I know they're not higher for the banks, but higher interest rates have been going on for the last 18 months. It's been, the Fed keeps the rates, very, very artificially low, but that's the way it is. I heard something really interesting today when I turned on Bloomberg early this morning just to see, what was happening in the world. And a Fed chairman the Fed president from Dallas, Fisher, said that there was a possibility that some of the bond buying what the Fed has been doing over the past 3 years might have had some effect on some of the markets. I mean, wow, let me see. They put $2 trillion into the economy, and they think that they might have some effect. I think they might be spot on that. We'll have to keep his feet to the fire to see if he's right, and then we'll understand what's happening. We're going to have a little break here, and we'll be right back with the Dow up 85, and NASDAQ up 5, to S&P up 7.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. This is Larry Pesavento with TFNN on the Commodity Hour, and we've been talking about the currency, and we've been talking about gold. We've been showing you the difference between the gold and the silver, and I do want to bring that to your attention because I think it is very, very important that we take a look at that, and I want to show you just one second here. You'll see how weak the silver really is compared to the gold market, and that's the real key here is that, you know, we're not even anywhere close to the high we made just a few days ago in silver, and yet we're ready to take out the March highs from the 13th. We're only a few dollars away in the gold market. This is very, very bullish action in gold. The problem is we don't have a lot of help with the open interest and the volume, but folks, I think Rich Anderson hit the nail on the head when he was on about 2 weeks ago, and he talked about that these open interest figures are skewed a great deal now because of the fact that we have all of these ETFs. The father of ETFs was on Bloomberg today, and I was I'd never seen the man before, but he talked about ETFs and counterparty risk and all the things that are there. So these are new instruments. They have, in the last 4 years, their volume has, I believe, quadrupled. I know very little about them. I know what they are, exchange-traded funds, but I don't know much about that. I mean, who knows, but we'll have to just wait and see. Regarding silver, we need silver to get above $22 an ounce. That's about 40 cents from where we are right now. and then we would have a pretty good chance of a breakout, I believe, in the silver market also. But gold is the big daddy rabbit, because if we can get gold above this high we made just the other day at 1356, we'd be looking at another $20 higher, and any move above that will be going a great deal better. So it will be really interesting to see what happens when we get to that point. Someone asked me a question. It's not a commodity, but we'll ask about Apple. Folks, to me, Apple is still in a downtrend. We've had lower tops in Apple for quite a while, since November nowadays, so I don't see any reason why this stock is going to break out. It would have to get above $560 in share in order for Apple to break out to the upside. That's the way that it looks to me. I've had a request to take a look at where the actual move is in silver. You'll see we've hit the 61% retracement several times, and just a little bit higher we would be at the 786 level. So whether that's going to happen or not, we want to have to wait and see. One other question that someone emailed me last night, and I certainly respect this, because they said, how can this stock market keep going up the way it is? Folks, the top is just not in yet. The long-term cycles that I'm looking at with these long-term patterns, I thought that they had topped on the new moon of March the 1st, but we're 6 days past that now. We're at the anniversary of where we were in March of 09. That was March the 5th. The actual market really didn't turn up, I believe, until the 8th of March, as I recall. But the actual low, I think, was made on the 5th. We made a double bottom that following Friday or Monday. I'm not quite I remember it, but not exactly the sequence of how it occurred. So I don't, we've got margin debt coming out the quietus, folks. I mean, this is not going to be good. That much I'm 100% sure of. My timing might be off by another 3 or 4 years, but I know that it's not good. That much I can actually tell you. We'll see. That's be the thing that we're looking at. Someone asked about whether I went long gold last night. I'm still long the gold from the 1250 area. I took a little bit off during the emotionalism of day Sunday, but then they gave me a beautiful place to buy it back last night, because it pulled right back to a 61% retracement, and it couldn't take out the lows from 2 days ago, which told you there was very strong support there at 618. And so, market took off, so you don't want to be, you don't have to be a hero and try to fight it like some people do in the stock market, for heaven's sake. I can't understand why they would do that. I've switched over my trading in the stock indices. As of yesterday, I've moved to the crossover of the 200-day moving average crossing over the 50-day moving average, and when that happens, it looks like that would be an indication to get into the market. So there's a little research I need to do on that yet, but we'll see. We've got the Dow up about 90 points, the S&P up 7, NASDAQ up 4.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to alert you to the fact that we have some pretty big moves occurring in the corn market. We made a bottom in the corn, as you remember, down around the $4.05 per bushel level. And we've now moved just a little over $4,000 in a matter of 3 months here, and we're not even into the growing season as yet. We start planting corn here in a couple weeks, around 1st of April, and so that'll be an interesting thing to happen. But we are almost at the 786, another 10 cents, and we'll be at the 786 retracement of our highs from last August when corn was up around $5.20 a bushel before it dropped down to around $4 a bushel, and now we've had a big run. Just remember that Rich Anderson was talking about this fact that the corn and wheat were, way undervalued at that point. The whole world was bearish at that spot, and cattle were soaring, which means that they had to be fed. And however, the new herd coming out in cattle is so doggone small, it's going to take a long time for the cattle to have to increase that, both the cattle and the hogs. So you're going to have to get ready for higher prices probably for the next year before these herds can be rebuilt in both cattle and hogs. That's what it looks like from the commodity standpoint. We'll take a look here now at the price of wheat here. That we've had a big move in wheat also. If you'll give me 1 second, I'll show you that we've had a move of well over, in fact, it's exactly $5,000 in just the last, oh my gosh, it's only been the last 5 weeks where we've moved $5,000 in wheat, and we're almost again at that same 61% retracement, coming back to those highs from last fall. So the interesting part about this wheat chart, folks, is something that we use in all technical analysis, and that is that we had a big gap up 5 days ago coming off the C point, and we had a very long-ranging bar occurring at that spot, and so it was really, a really big move in wheat, and that tells us that it wants to go higher. We're looking for at least another 30 or 40 cents a bushel higher in wheat. That's what it looks like from our standpoint from here. And remember, that's just a bear market rally because, wheat was up around $8 or $9 a bushel, just last year, and so this is just a snapback rally, and that's what we're having in a lot of these markets like sugar and some of these others. Coffee's gone absolutely, bonkers. I don't trade coffee, but it's up well over, it's hit the $2 per pound level in coffee, so that's another one that looks, real interesting from the commodity perspective is coffee, but I frankly don't trade it, don't want to, don't need it. So that's the bottom line that I'm looking at. Okay, I have a question from one of our listeners about the VIX index, and I'll post that up here so we can take a look at it. I was watching it this morning, and as I usually do here, and there it is. Give me 1 second, and we will get the VIX index up because we are back to the 786 retracement once again. And that tells us that, there's absolutely no fear in the market. And, that's the bottom line here. So you'll see that, after the big run-up that we had on February the 3rd when we were making our low, we've come down really hard again, stopping right at the 786. The comment that I've been asked to make is about what's happening in the Ukraine. Folks, I have no idea what's happening over there, and I don't think anybody else does either. All I'm looking at is how the markets react to it. From what I'm looking at here, there's no fear for anybody to buy stocks or whatever it happens to be. It's because our dollar's getting trashed or whatever it might be. I don't know anything about it, and I don't believe them even when they do tell us. I watched that lady from the IRS, Miss Lerner, yesterday take the fifth, and that's certainly her right. That's in our Constitution, But here she's a government employee, and she's not telling us, things that are part of her job, and that shouldn't be fair. But because she's not been charged with anything, she's able to take that. I'm sure there's going to be some ramifications of this, but just to watch the political process yesterday with the chairman, Darrell Issa from California, it was actually embarrassing, to see the two congressmen there arguing right in front of the TV. But, that's politics, so what are you going to do? The old adage is, if in order to avoid the fifth, in order to have a happy 4th of July, don't forget to buy a fifth on the 3rd. That was back in the days in Indiana when they closed on the holidays, but now they're open all the time. So I won't go back into my childhood anymore. It's tough enough going back that far, so we'll see. All right, I have a question here that someone was asking me about the Russell 2000. I know it's not a commodity, but it trades like a commodity, and they have it on the commodity board, so we're going to take a look at it here. We're doing the same type of, this is the nearest futures that we're looking at. This is the Russell small cap, and as you can see, we made a high yesterday. We have not taken out that high as of yet, but I think that's insignificant actually, because we've done it in the NASDAQ, the New York Stock Exchange Index, the S&P Cash, and the Dow Jones have all taken out the highs of yesterday. I do not have anything here in cycles as far as a key date. That key date that I was looking at was that Monday. Well, actually, it was the 1st of March, which was the Friday, and then we had the big gap down, and then the market, came back and took it all back, right away. And when it did that, it's basically telling you that it has no fear of anything that is going on, and why should they? I mean, this thing's been in a very strong trend. I want to say again, my hat's off to Basil Chapman of TFNN, because on Tuesday when the market was down 250 points, he said this market should be getting to rally right now, and it was still going down when he said that. In a matter of a few minutes, they must have been listening to him, because the market turned around and rallied 500 points, or 450 points anyway. So this is it's been a big move, and we'll see how it ends on Friday. Remember, last week we closed the S&P at 1865, and we're trading around 1880 right now. So within the next 2 days, the rest of today and tomorrow, if we close below 1865 on a Friday, which would be nearly impossible, but if they did, then you would have a potential for a weekly reversal where you've made a higher high and a lower close than the previous week. That would be a very bearish indication should that happen. And that's what this old cowboy is waiting for, to see if there's some type of confirmation in here, because I don't have any timing stuff. The long-term stuff says you're absolutely nuts to be in stocks here, unless it's different this time, and it's never different this time. But short-term, once that new moon was violated on Monday, from Friday to Monday, that's it. I mean, it's very rare, because we've been straight up since February 3rd. This is the fifth week that we've been up. Basically, we haven't had any correction. This is the longest period, I think, since 2011. This is the last time we had a 10% correction in stocks. And this is, I think, our longest period in well over 40 years, 40 or 50 years. So we'll see. We got a call from Denver, Colorado, where I just was speaking. Tim, are you there?
Yeah, this is Kim. Kim, not Tim.
Kim. Oh, it says Tim on my little my prompt, but that's okay. What can I do for you, Kim?
Sometimes it sounds like Kim, sometimes it sounds like Tim.
Hey,
so
as long as you don't miss late for dinner, you're okay. What can I do for you, my friend?
Someone asked about Ukraine.
Yes.
Nikita Khrushchev, 60 years ago, right? He's Ukraine. So he gave the province of Crimea to Russia, to Ukraine.
Yes.
And that's why Putin wants it back now. And that's the reason why.
Well, that makes sense, but it's very strategically oriented. I've been over that area.
Yeah,
it's very strategic. Yeah,
it's in the Black Sea, and hardly it freezes, and they have good seaport down there.
Mm-hmm.
So Putin
and I think
wants
that's a big resort area for a lot of Russians too. Is that in the summertime it's a big resort area. So that's another reason why he probably wants it. But we'll have to wait and see.
60 years ago, Nikita Khrushchev, he's Ukraine.
No. Oh, so I remember that Khrushchev very much.
And him and Reagan weren't getting along. So Reagan was trying to build the Star Wars defenses against Nikita Khrushchev.
I remember it very well. That was the old Cold War days.
Yeah, but anyway, he gave the province back it's Russian province, but he gave it to Ukraine, being it was Ukraine, see? Mm-hmm. And now Putin wants it back. So that's the reason why, The reason I called is someone asked about Ukraine, and you said you didn't know much about it. Yeah, so.
This is true. I've only been to Russia a couple times. I've been to Moscow and St. Petersburg, so I haven't been to that area of the world very much at all. I did hear something. If you've got a second, I want to post a chart in the Tiger Den today about crude oil, because there was a meeting at the some hedge funds last night in New York, and my best friend was there attending, and it was about 3 hours long, and several of the people that were there, Soros happened to be there. He wasn't speaking, but they talked about the reason why the big leverage that they can have against Russia is if they can push crude oil below $94 a barrel, because that's the break-even point for Russia. Once it gets below that, it really hits their bottom line. And so if the market in crude gets down below 94, it puts extra pressure on them. So they're going to put economic pressure on them. We certainly can't do anything with boots on the ground or anything like that. But, we have to watch how the market reacts to it. Right now they could care less. It just wants to go up no matter what.
No, the other thing, too, people forget, we don't have the space shuttle to go to the space station now. So we need the Russians, too.
Well, we have to learn to live together, but that's never been a factor in our globe in the 5 billion years we've been here. It's always been somebody at war with somebody else, mainly because of power, and things like that. But, Putin being with the KGB, he's got more chutzpah than Obama. Obama's never, he's never gone through anything like that. This guy's he's been tested,
Well, he's a KGB, yeah. Mm-hmm.
Yeah.
He has power too. Yeah. Mm-hmm.
Yeah, he wants to be a KG wannabe is what he wants to be. Well, listen, thank you for calling in, Kim. I certainly appreciate it.
I just thought I'd let you know, yeah.
Mm-hmm. I appreciate it, and I hope your weather warms up before the 4th of July. I was there this weekend. It was 8 degrees, and I said, I think I'll have to pass on that.
Today. It's 60 degrees today.
Oh, this is good. Okay.
Yeah, sometimes I hear your show, William from Singapore call.
Oh, yes, my good friend. Boy, he's a nice guy. I talk to him almost every day.
Yeah, I grew up in Singapore. Yeah.
Oh, wow. Yeah, it's a beautiful city. Sarah and I, we were there last year speaking, and we really enjoyed it. It's a very clean city and really friendly people, and it's just a little too expensive, but it's still a lot of fun.
It is right now. Real estate is more expensive in Singapore than Hong Kong. You know that?
Oh, yes. I'm aware of that, because Sarah has some real estate there.
Yeah,
so.
They just went ahead of Hong Kong in the cost of real estate right now.
Wow.
Well,
thank you for calling in, my friend.
All right. Talk to you sometime.
Okay, you bet.
Yep, bye.
Okay. By the way, that comment that I made about crude oil, those are those people's opinion, but after we hit the 61% retracement at that 104.50 level per pound on Sunday night, we've dropped 4% in a matter of 2 days, and that tells us that we're heading down. We're almost below par right now. We'll probably be below $100 a barrel while we're on the show here, because we're trading at par 26, and we could easily be there a matter of a heartbeat. We're going to have a break coming up here pretty soon, but I think the key things to watch today, are the close of the stock market. If we close below that 173 level in the S&P futures, which looks very doubtful at this point, that would be a sign that there could be a correction coming. But the long-term charts on this, folks, I will stand by those. It might be different this time, but this is really a time to respect these long-term patterns. I can't tell you how strongly I feel about that. I've been wrong here. I really thought December 31st was going to do it. We had a really good break, and then I thought possibly on March 1st, and it looked like with the news it was going to happen, but the news didn't happen. It turned around, and when the market turns around and shoves all that bad news down the throats of the shorts, man, you can't stand in front of that, because if a market doesn't go down on bad news, it's only got one way to go, and that's up. And that's exactly what's happened with it. So whether that's going to continue or not, we'll have to wait and see. The NASDAQ also made a little bit higher high today. We've completed a lot of these, patterns again, but like I said, I don't have anything major after March the 1st other than the anniversary date that we had yesterday, on March 5th. And anniversary dates can be off by a week, and sometimes they don't hit at all. They were made popular by W.D. Gann back in the 20s and 30s. But that's, in fact, you don't see too much of that, anywhere there. I know that someone mentioned that Harry Dent is talking about 17,000 in the Dow and then 6,000. Well, that's a possibility, but improbable as we speak. Oh, boy.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV, I think, what is the most important chart of the day. I think it's even more important than any of the stock indices, and that is the chart of the euro. Because, you know, you're hearing a lot of talk about the big breakout that's occurring in the euro, and on the long-term weekly, I can see that, but it needs to get above the 139.50 level. What I've done here is our good friend Andy from Berlin from Stuttgart, sent me this just a few minutes ago, showing me the time and price symmetry from the bottom that we made down at the 61% retracement this morning at around 137. And we've now rallied well over $1,800, and we're coming into this sell zone, which is up around the 138.80 level. We're only a few pips away from that level. And if you look at the time and price squaring, in other words, from the high to the high and high to the high, that comes in a matter of a few hours. That will be very near the close of the stock exchange, or just right before the opening of Asia. So it's going to be real interesting to see. But if we explode through that 139, 40 level, then that's telling us we're well on our way to 143. But just because we're looking at that long-term chart, you really need to take a microscope out and say, okay, this is what it looks like. But then you go down a little closer and you see these patterns on the hourly chart, and that's telling you a little bit different story that you see on the long-term weekly. Remember, the weekly chart has been up for 6 straight weeks. This thing has been bullish, and, that was not too hard to understand that when it was down to 132 level. But now that we're up near the 139 level, it's a different story. And we could be looking at the same thing happening in gold also. But this is the one in the currency is just very, very clear. And the currencies are, really the best thing to trade because it's pure money. It's no talk. They walk the talk. And, it has, news stuff, but, it's 1,000 times bigger than the stock market, folks. These markets are huge. And they're 24/7, 5.5 or 24 5.5. They go 24 hours a day, 5.5 days a week. So there's a lot of trading that goes on every continent, Asia and also Europe and then United States. So that's what we're looking about now. Treasury bonds, they've been breaking down badly, and as you know, everybody at TFNN has been bearish bonds for well over a year and a half, and they still look a lot lower. We're coming near some support near the 130 level, but if we get the June bonds under the 127 level, we're going to see a spike probably in interest rates would be my guess. We've had a little bit of a rise here these last 4 days because of the reaction to the Ukraine, but not much has really happened here, with that. So that's something we've got to keep in mind. Treasury notes are looking the same way. They're also having increases in interest rates these last 3 or 4 days as the world realizes that there's no problem there. And if you believe that, I still have 2 shares of the Brooklyn Bridge for sale for you because this thing is not over. I think it's a giant chess game that they're playing, and we have our president playing with marbles, and Putin is playing with chess. So I think we've got a long way to go, with some of these things to understand, where actually some of these things are going to be. We got our Dow right near the high of the day. The S&P is still up pretty strong, up about 7. The NASDAQ is not up very much today. It's only up 2.5, but it's been really, been going crazy to the upside too. So we'll see if these things are moving. The Russell small cap is the only one that has not made a higher high today, but that's still early, and that they could do that very easily. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.